after the prolonged USD gaining move, which was shown during that of the yearly trend reversal and also during that of the monthly trend reversal move during the month end of January and the early part of February. Now, with regard to the levels in which the currencies are expected to swing, and you will come across that yesterday they showed the level 1.1270 as the low, and then subsequently gained the level, and they're hovering around that of 1.13, and from that of 1.14 they just dropped it out after the non-farm payroll, and then subsequently they are not dropping it much and they are holding it in order to gain back again the level, and they will slowly make the people to understand that non-farm payroll is discounted and the market is trying to react for the different news. Then in the case of GBP, 1.5201 was the low yesterday they shown, and they could make further downward stopping before making a rise, and during that time one can buy around 51.67 or so, and then they will try to gain the level considerably. Earlier they gained it up to 1.53. From there they made the drop of 100 pips, and they could make a downward stop, and after doing the consolidation here around 52 level, and then quickly gain above that of 1.5285 and go to 1.53 and above. And quick gains could be seen in the case of GBP in order to change the market sentiment. And also in the case of USD Yen, they are just they consolidate around 119. From there they come to 118 level. Slowly they will come down to 117, 116, and then a quick extended downward stop, and then afterwards they are expected to gain back the levels in the case of USD Yen. So be careful while trading USD Yen. And also its crosses, this time they are going to be very volatile. And in the case of, because they will make the contrarian move, they will drop USD and in order to trigger Euro and GBP to gain quickly, and then subsequently they will also reverse USD and start gaining the level as a contrarian move. And in the case of CHF also, they are going to do the similar thing, that quickly gain and drop from there and again continue to gain. So these denominator currencies, excepting USD CAD, they are expected to make again upward journey. In the case of Canadian dollar, and from that of 1.2770 of last week, they started coming down to 1.24 level. And after consolidating here, they will come down to 1.23 and consolidate. And then subsequently, they will start making the slide. And that will be one-sided slide in the case of USD CAD. And then they will say that USD Canadian dollar has become stronger against US dollar and all other stories. Then Australian dollar, also from that of 0.76, it has come to 77 and 78. And after consolidating here, once they go above 0.80, we could come across a quick upward jump in the case of Australian dollar. So keep in mind that the players create the market sentiment and act against it of the traders. So after the bearish sentiment, what they created during the month of December, January, and also the early part of February, now they will start gaining the levels in the case of Euro and GBP, giving some other stories. And if you think that the market sentiment is continue to hold similarly, like USD gaining moves could be seen, then we might be disappointed, because every time you come across new month, new type of trend they show and try to trap the traders after the monthly trend reversal moves. So in the case of the market reading technique, so we note down the initial lows and the highs around 3:30 GMT and try to find out what could be the type of moves they could make in the market. In the live market quote page, yesterday's lows and highs are being shown, but actually today's lows and highs are 1.1324 and 1.1336. Market is holding tight around the particular level, and in the case of GBP, 1.5212 is the low, 1.5231 is the high, they quickly gained the levels in the case of GBP and to 1.5250 and then made that drop and holding around 52.31. As I told you, they are expected to gain the levels slowly in the case of Euro and GBP. So during late Japanese session, they could make a brief downward stop and or brief downward false move and start gaining the levels again. Then in the case of yen, they are holding closer to the top 118.41, that is the low, 118.66 the high. They are not breached it. Then CHF 92.34 is the low. They just breached it by 4 pips and holding there. 92.52 is the high, and they are likely to come down a little bit, but not going to make a very big drop from here. They will consolidate and slowly gain again to 93, 94, etc. Then in the case of Canadian dollar, 1.2467 is the low they set as the initial low. Subsequently, they have come down below that 24.53 and 24.58 currently holding, and so they are below that of the initial low for more than 30 minutes in order to make a further slide. And 24.81 is the high, which is intact. Then in the case of Australian dollar, 77.92 is the low, 78.26 is the initial high. They just breached the high and gone about to 42 and then come below that of 78.26 and holding around 78.2022, and they're expected to make a small dip in order to handle the crosses of the Australian dollar, and then subsequently they might gain the levels after making a brief downward stop. And because the low is also closer to that, they could make a brief downward stop in order to hit the stops of the long holders, and then subsequently they will gain the levels. So at the moment, we come across all the currencies are showing the USD weakening more in a nominal condition, but they are expected to make further visible gaining moves in the case of Euro and GBP in the coming days. So once we note down the initial lows and the highs and compare the market to that, then we go in for the market reading and the trading decisions. So once the market is near that of the high, or Euro and GBP are near that of the high after 3:30 GMT and not breach the high for more than 30 minutes, then we can take a sell and then quickly book profit during a small slide. And then late session, when they are closer to low and not breach the low for more than 30 minutes, or during start of the European session, we can take a buy and then they will gain the levels and you can book profit. That way, we try to watch for 30 minutes, and if they don't go below that initial low or above that of the initial high, we try to take positions. When the market is in the middle level, we avoid taking positions. Still, we try to keep 30 pips hedge order to limit the risk, and once the position makes about 20-25 pips profit, we try to keep stop at entry and remove the hedge order. And then exit will be around 45 pips if the nominal swings are seen, and it can be 75 pips or above, like 150 pips when they are making an intentional move in the market. So that you need to watch and try to take the position. So these are all the market timings, so which we need to carefully follow to understand what they are trying to do it in the market. And only if you follow in relation to that of the market timings and the type of moves they are doing it, then you will be able to really understand, okay, what is going to be the next move. So each session, there are 3 sessions in a day, and the session timings are given in GMT. And now today it's around 5 GMT. So it is in the late part of the mid-session, and then after 6 GMT, 6 to 7:30 GMT will be the late session. Then afterwards, after a gap time, there will be European session again, which is subdivided into 3 sessions. And early in the late sessions, they handle the majors, and mid-sessions, they handle the crosses. Then again, US session, you come across that 14 to 21:30, 14:30 to 21:30. and afterwards a gap time before the start of the next day. So it is a 24 hours market cycle. So that way the players try to make the moves in the market. So don't take the market to your local time. Instead, come to that of the market time and understand how they are making the moves in the market, and they don't do hat trick. That is, not more than two sessions, they make similar moves. Keep that in mind, and that way we'll be able to understand, okay, this is the time to buy when they are making a quick drop, or time to sell when they are making a quick rise for two sessions. Then also they handle only two pairs at a given time. So identify those two pairs which are making more than 40 pips spread between the high and the low, and those currencies they are handling at the given time. Then accordingly we can also take positions in those currencies, thereby quick moves can be seen in the market. So I'll come back on 12th of February to do the follow-up of this particular forecast, what I have given it for this week. And meanwhile, if there are questions, I will try to answer to those questions. Then Jen has got a question. Does it make sense to go long GBP USD until just below 30, 53.40? Yes. From second week onwards, normally we can do position trade. So during that of the year end and the month end time, or month beginning, year beginning and month beginning time, they will make the trend reversal moves. So during that time, we can't envisage the position trade. But now, if you carefully watch, and during the dip below that of the lows, what they have done this week, you can definitely take a buy position, hold it for about 200, 300 pips gain, and maximize the profit. Because GBP could then resume the downward to 50. And do you think that it is a bottom for GBP 49.52? Yeah, most likely 49 area is the bottom. They set it in the case of GBP, and actually this time they just used the euro sentiments mostly and dropped euro to 1.11, but the GBP drop was just to create the sentiment, so they did not make much of a drop. Normally what they do is they just make extended move on the downside in the case of GBP to change the market sentiment. But unfortunately this time in the case of GBP they have not done that much damage, but only in the case of euro they have done it. But they will quickly recover and show further higher levels during this week, and also this rise could be sustained till August 2014. Yeah, I will show the slide 2 and 3 again. Okay, then Jen, do you think that GBP is moving beyond 53.40 to 54 before it is trend resuming downward? No, I am not expecting a big downward move in the case of GBP, and they may make about 50-60 pips drop in order to, as an extended move, in order to confuse the traders, those who are holding long to liquidate, but they will gain about 100-150 pips each time, and using some trigger, which are in the form of news release or speech, etc. And they are expected to gain more than 1.54. And as I expected, as I calculated, it could go up to 1.57. This run. Afterwards, make some consolidation and then continue to gain further levels. And Brain, what do you think will happen with Australian dollar yen this week? So Aussie yen, as I explained, that yen is expected to make a downward move, and Aussie is expected to make an upward move. So slow downward move could be seen in the case of Aussie yen. And what do you think will happen? Answered it. Will ask a question. Will you be seeing much of a weak beginning false move, or have they accumulated enough? They accumulated already during that of the yearly trend reversal and monthly trend reversal. All the extreme downward moves they stopped, and they are only making small swings in the market just to confuse the traders, but and induce traders to take and go and take sell positions, and later on they wanted to trap them. So not much of a downside is envisaged. But Karthik, is there any chance to drop euro to 1 point? It's most unlikely. You could see euro further making drops. And people might say that every pullback is a sell opportunity. And to my understanding, they are not expected to mix that way, and they are expected to trap this time the short sellers. ZAR yen or ZAR US dollar? Because ZAR yen I don't track. ZAR US dollar ZAR, that is South African rand, it is expected to become stronger against US dollar. Then do you think that USD CAD to go to 1.30 is very unlikely, sir? They are expected to take it down in a big way. Then what is your view about USD-INR? USD-INR 63-64 level, they just made the trend reversal on the upside, and they are expected to make a continuous downward move. And we could see that 61-60 are going to be established soon. Any other question? We have some more time. If you have got questions, you can ask. Meanwhile, I'll show the slides, what I have shown it earlier, because some latecomers, they like to see. Okay, we could see more of an upside move this week, and more visible upside moves could be seen next week also. So trade accordingly and look into that of the session-wise swings, and then try to take positions as swing trade if you want to do safe trades. And those who wanted to do position trade, wait during the slides, the quick draw, and then try to take the position. Once the position makes profit, keep stop at entry, and then try to continue it as a position trade. Wait till end of third week and maximize the profit. But in the case of the denominator currencies like USD CHF and USD yen, don't try to sell. Instead, wait for the quick drop to happen and then take buy position. And again, they will try to gain the levels in them as contrarian moves. So that you keep it in mind. Then in the case of commodity pairs, we will come across that USD weakening moves are going to be very strong moves, and the commodity pairs normally lead the rally and lag behind later on. During the trend reversal time, they will lag behind. Before that, they will try to lead the rally. So if you follow all the 6 pairs, you'll be able to really understand what they are trying to do it in the market. And that is vital for us to take trading decisions. Simply go with it of the data release or go with it of the technical analysis. If you try to think that the market is going to be bearish or bullish, then you might come across a surprise. Instead, try to follow the session-wise moves and understand what sort of moves they are doing it in the market, whether an extended move or an intentional move. Always keep in mind the quick moves are false move. When they make a quick drop, understand it is a false move in order to gain the level slowly, so that they will just go and hit the stops by circular trade on the downside and accumulate the buy positions during the slow gain. And yesterday also we have seen that they've gone below that 1.13 quickly and came to 1.1271 and then slowly gained the levels and went up to 1.1340 and they accumulated the buy positions that way. So always quick moves are false move. When you come across quick moves, understand opposite, you have to take the position. And based on whether it is a stop and or an extended move. In Willis question, when all currencies are showing such small spreads, can we conclude that they most likely will need to breach before making a move? Yeah, normally when the spread between the high and the low is less than 40 pips in all the currencies, that means they are waiting for some the traders' commitments. So once the traders commit positions, and they will try to use the data release or any other thing to trigger the market. So once the spread is low, less than 40 pips, and there is no point in taking positions, and it will test our patience if you take the position, and that way, by the time we lose the position and close the position with a small loss, you'll find the market start making move in our favor. In Jen, if I go long GBP at 50 to 75, do you think I'll be safe before a major trend reversal until new high? Yeah, relatively it should be safe, but still, whatever said and done, don't keep the positions open with unlimited risk. So always keep hedge order to limit the risk. Because, see, I'm not God to give you such information that GBP will not come down beyond this 52 level. So you have to keep it in mind that the players can make stop-ins, players can make extended stop-and moves. If all traders start taking the buy positions and nobody is short selling, then what they will do, the players will make one quick extended downward stop and hit all the stops. And also those who have committed more position, thinking that the upward move is very good, then and commit more position, they will go in for a margin call. And then subsequently, the players reverse the market in a matter of about 1 or 2 hours and quickly gain it. And during such time, normally, they use the rumors to make such moves or the speeches. So always try to take limited positions and keep hedge order to limit the risk. That is why I always give importance to that of the trading strategies. Ultimately, limiting the risk is vital in our trading strategy. We cannot afford to take risk or we cannot afford to take loss by simply keeping stops all the time. So once you keep the stop, and then when the stop is being hit for 2-3 times in your trades, then normally our tendency will be avoid keeping stop. This is what happens to most of the traders. So that is why I want to recommend to that of the traders, instead of stop, use the hedge order. And in the event, if the market has hedged you, you can just watch. If the market has gone extremely deviated from your original position, still no problem. You can just close your original position, buy position, with the hedge, accepting 30 pips loss. So anyhow, when you keep stop, that is going to instantaneously close your position. Instead, you can close your original position with the hedge order, accepting 30 pips loss any time of the day or any time of the week. So there is no hurry for you to close the position in case if you do not understand what is going to happen in the market. Similarly, if the buy is not making profit and the sell is consistently making profit for more than 2 hours, you can understand that they are making a move up against you. So you can quickly close the buy position, maximize the profit on the sell side. But if you use stop, you cannot do that. And if you try to sell after the drop or buy after the rise, invariably leads to that of distress trading. That's what most of the traders and also the technical analysts nowadays suggest, namely the breakout trades. Now also I see a question that can I buy GBV around 52.75? So this is what it leads to that of the breakout trades. And you know the players are very clever. When the traders commit in large number the breakout trades, like a herd mentality, then they quickly drop and hit their stops and then continue to rise. So keep that in mind, that our commitments are being viewed by that of the players. So accordingly, they make the moves in the market. So we are all trading against the players. So in the process, the players continue to earn money and the traders lose. That is why you find a prevailing statement in the market that 95% of the traders lose money in the market. That means what? Those traders are following technicals and fundamentals and trading. And everybody says that no, follow technicals and fundamentals as one statement. Another statement, 95% of the traders lose money. So when they follow technicals and fundamentals, then why they should lose money? If you relate those two questions, then we will be asking certainly this question. But when the analysts give their webinars and fine-tune their forecast, what they do, don't follow blindly the technicals. There are certain intricacies involved. But again, they try to assume certain things. And once you go in for assumptions, and it may be statistically proved, but if they are assumptions, it is something like comparing the tiger with that of lion and try to find out if there is a relationship. And similarly, the stock market is related to that of the forex market or commodity market, or Dow Jones is related to euro. This sort of comparison, when they try to give it, it might appear that they are convincing type of analysis. But after some time, you'll find the players will change it. And then later on, you will find yen is following Dow Jones and not euro. That sort of moves they will try to make it. So they only create such hypes in the market using the analyst. They make some analysts very popular and ask them to make statements, and those analysts make the statements that the market is following Dow Jones, market is following or any other stock market or commodity market. Euro is following gold, Australian dollar is following gold, crude and Canadian dollar following crude, etc. Then subsequently you will find that when you commit positions following such a relationship, they slowly change the correlations. And then you will find the correlation becomes 40-45%. From 55%. So they are all nothing but just to give some sort of solutions to that of the traders, but those solutions are not permanent solutions. And I have been explaining this from 1999. And till date, I have not changed my strategy. Till date, it is working. So you have to understand that we need to have a proposal which can bring in consistent profit to us. Then I understand Jen has got a question, but if we are long at 52.75, my stop would be at 51.50. Don't keep such a wide stop, sir. Okay, if they make one extended downward move and hit your stop at 51.50, from 50 to 75, how much of money you will be losing? So 125 pips you will be losing. Is it a clever way of trading? Taking a risk for 125 pips, and also you try to say that you will be able to earn 200, 300 pips. Now you may say risk reward is 1:3, but it is stupid. Losing 125 pips in one single trade. Can you afford to lose it? And what will happen to your usable margin in case if it is filled first? Then Ini has got a question. You have informed us that they work with two pairs in a session. Does it also follow that in every day they have to work on all six majors? Yes, they have to make moves in all majors during the day, because ultimately they need to bring in the moves in the case of four majors and two commodity pairs, and also the respective crosses only by making the contrarian move in the case of the majors. So now you find all are making Euro, GBP, and Australian dollars making positive moves. But USD CHF is also now making positive move. So they are making contrarian move this way. So these contrarian moves we need to understand. Similarly, many days you would have seen that now also you can see Euro is making about 9 pips positive net change, whereas GBP is showing 21 pips positive net change. So they are expected to gain first the levels in the case of GBP, followed by the Australian dollar, and later on Euro. That is how you can easily estimate by using the live market code page, and then you see that that's what's happening in the market. There are days, 1 or 2 days, there might be deviation from our understanding, but predominant of the days they will try to do similar moves. That is in line with that of my explanations. Then here, Chowkier has got a question. We should buy Euro and GBP during the European session. Yes, during early European session dip, you can buy Euro and GBP, and later on they are expected to gain quickly during the European session. Okay, no more questions. So I'll go to the last slide. So I take this opportunity to thank FX Street for the facilities provided to present the webinar, and I'll come back on Thursday and review the forecast, what I've given it, whether the market is moving in line with our expectations or it is going against, so that we will objectively review and understand how far our forecast system is dependable. Thank you one and all. See you on Thursday.